Good day, traders. Stacey Burke from Stacey Burke Trading. Just a short video today on comparing trade setups to narrowing down the pairs that I consider to be the best candidates. In Asia, I look at the yen crosses, Aussie dollar, New Zealand, CAD yen, New Zealand yen, Aussie yen, pound yen, and euro yen. Now, obviously, oil, gold, and indexes are slightly different, but in terms of the yen crosses, what I typically will look for, again, trying to identify the best candidates, I just come back to the basic principles that we've talked about. Obviously, the timing window, 8 p.m. to 11 p.m. New York time. It's 8 a.m. for me here in Perth. But more specifically, the 100 pip increment boxes, and looking for a market that's gone vertical. It's Monday today, day one. So obviously, unless something breaks a high or low of the week, technically we're inside, and then the next valid area would be previous day's high or low. And if that's not a weekly high or low level, then that's still relevant because it is the high of the day, low of the day. But coming back to just the basic concepts of three levels of rise or fall, if I run through these different pairs and just look at how the market closed in the U.S. session, again, just coming back to looking at where a market goes vertical and if indeed it closes up in a third or fourth level. Again, I want a 75 pip box if I can look for a market that potentially is going to reverse for a dump if it's a pump and dump setup. And so I'm just scanning through the pairs to look for which candidates may offer me the best opportunity heading into the open of the Asian session. Now, obviously, the euro yen sold off from 75. When I zoom in on the smaller time frame, again, this market, the consolidation is above 50. So coming back to looking for that pump and dump opportunity, I want to see a market that goes up three levels, goes sideways, and holds volume up on that third level. And again, the understanding why is I want a 50 pip box for that to trade back to the low of where that move began or the low of the day. And again, just coming back to that, just comparing the different pairs, you'll see in a moment, I like to see something that closes near the high or at the high and has gone sideways. Now, this market still gave us an opportunity. Somebody asked why I don't use moving averages or other indicators. Well, for these setups, again, once this market breaks down, if I'm selling at a level and the high or low is locked in, I'm looking to get in at numbers after the first 15 minutes if there's a peak formation. Now, obviously, this market has given us a sell signal, but comparing that to the other setups, you'll see in a moment why I didn't choose this pair. But once this market's breaking down, I already know that when we're up high, this isn't going to coincide with any indicator signals on day trading. Very few indicators are of any value for short-term trades like this. Again, it comes back to knowing your setup and knowing exactly what type of entry is the optimal entry in terms of the candidates for your trade setup. Looking at the pound yen, we saw this market go vertical in London and then trade in a 50 pip consolidation into the U.S. session and close of the week. So again, this is a cleaner setup where we have a clear third level of consolidated volume prior to the open of this morning's session. So again, looking for volume to be trapped. Now, I don't know if this market's going to continue its move until the beginning of the day. The difference again with this pair is that we have consolidated volume above the third level, locking in our peak formation and trading above the numbers heading into that second 15-minute rotation in our 12 candle window for a nice clean 50 pip move back into the run up from the London session. So again, the entire US session was trapped above that third level, lots of space underneath for the pump and dump. The peak formation stop hunt locks in the high, and then the entry after our first 15 minutes confirms that for the vertical 50 pip move down. And again, just comparing that to the euro yen, where the US session traded higher and then went into consolidation, as opposed to the entire US session being on that upper level of consolidation. So again, a whole box, a whole session trapped up high. The yen, very similar. Again, just not quite as large a range as the pound yen, which again it's a clean, super clean trade. We had volume trapped on the third level, the entire U.S. session, above double zeros, locking in the high. First 15 minutes gives us our false move, and then second 15 minutes peak formation stop hunt for a roughly 40 pip move in terms of entry and exit on this trade. Aussie yen, very similar. The U.S. session went vertical, but it went into consolidation into the end of the session on the third level. And then again this morning, when the Asian session opened, we had our stop hunt to the previous high of the day and locking that in prior to our 12 candle window, and then the market gradually fading and falling into free fall for over 50 pips, clean straight back below that U.S. session consolidation and back through the low of the U.S. session. So we had a nice peak formation, vertical move, consolidation. This was definitely the cleanest of the pairs. This is a textbook best trade setup. Took the pound yen instead, but Aussie yen gave a very, very clean 75 pip move. Plus, obviously, traders can get in early, but again, waiting for that to be locked in, and then heading into the open of the session, this market was in free fall. Looking at the Aussie dollar, not quite as clean. Our level, we have a 50 pip box trading off of 50, consolidation up high. Again, traders, if they traded this, may have been looking at roughly a 25 pip scalp, but the cross pairs in that Asian session had much larger ranges between the consolidated and third level. Again, Aussie level, 4 boxes. Pound yen had 4 boxes in terms of 4 25 pip increments. Again, New Zealand yen, even though it went vertical into the close, not quite the same as when we look at the pound yen. Again, we see that whole consolidation of the U.S. session up high after the vertical move. Same thing with the CAD yen. We have a nice vertical move, then a consolidation. That's again an ideal start. We're above the 50 pip area. So again, just looking for the 3 boxes. Coming back to that pound yen, we had a nice 100 pip plus move. The Aussie yen, a nice 75 pip move, but an entire consolidation on that third level peak formation stop hunt to the previous high of Friday, off double zeros for the vertical move back down. CAD yen, again, same. We have the previous day's high taken out. They lock in the high, and we head into the open of the session just below the quarter level. Again, a nice trade, but not quite as ideal as the Aussie yen and the pound yen. So again, just differentiating, being able to identify the best candidates and why. And again, coming back to numbers, levels of rise, consolidation, and then the behavior of price into the new day. So pound yen was my choice today. Aussie yen was obviously the better move in terms of the range, but the most important thing to understand is how this trade plays out. It goes vertical, goes into consolidation, trigger breakouts, hit stops, lock in the high, and then vertical. The trade itself is vertical. It's over fast. It's 50 to 75 pips, depending on the instrument and the box size. But just keeping it simple, looking for a vertical move, 3 levels, consolidation, stop hunt into the open of the session, locking in the high. It's a 1-bar stop. So again, these boxes are 25 pips. In a cross rate, a major pair, whatever that may be, 15 pips usually would be the max, because these pairs, once they start moving, there's no way they should be pulling back. If they pull back, then the trade thesis is wrong. You're out with a 15 pip loss. If you're in the move, that's 50 to 75 pips on the Aussie yen. Obviously, on the pound yen, it was 50. But these markets, once they lock in and they start to go, they accelerate fast because they have volume caught. And they're trapping and running away, margining them out, stopping them out, whatever that may be, hitting traders at break even on the opposite end of that move. But this thesis can play out in any session on any pair. And again, the box size can determine your profit potential And the volatility of that particular instrument will also determine whether that's, my max stop is usually 25 pips. And again, these trades should accelerate quickly and be over fast. So hopefully you got some value from that, traders. Again, it doesn't matter if it's Asia-London. It could be US-Asia for a London trade. It could be Asia-London for a US trade. It could be London-US for an Asia session trade. Keep it simple, traders. Start the week off strong. Have a great session, and may the markets go with you.